Hello everyone and welcome to today's video, how to use moving averages in your trading. Now, I have three moving averages that I use. I essentially only use these. Sometimes I'll add some others in, but the ones that I use the most are the 50-day simple moving average, the 200-day simple moving average, and the 20-day exponential moving average. Now, I'm not going to go into how these moving averages are calculated. You can do a quick Google search on it, but essentially, as it says, a simple moving average just takes the previous day, adds them all together, and divides them by the day. The exponential is a little bit more complicated, but it gives us a better target for near-term trading, and it's actually one of my favorite moving averages to use for bounce trades. Now, the example we're going to look at today here is AYRO, and we're going to look here. You can see here the colors will tell you what each of the moving averages is. So the 20-day exponential on my charts is the green line. The 50-day moving average is the blue line, and the 200-day moving average is the red line. So what I like to use the 20-day for is on big drops and big dips. I've learned over the years that the 20-day is an excellent bounce target on stocks that sell off. So let's take a look here at AYRO. It did the reverse split and it started to sell off big time, and you can see it got all the way down here to 247, then got as low as 215. Now, we had initially gotten into this stock around the 230, 240 area, I believe, not exactly. And one of the criteria I used was that it was an extreme divergence from the 20-day exponential. So what I mean by that is the stock was all the way down here right before it turned at, let's say, 220, and the 20-day exponential was up there at 375 to 4. So that was 50% or more higher than what the chart was trading at. This was the bounce target. Now, when we're trading the 20-day exponential using this guide, you're not always going to get in at the absolute lows, nor will it always run right back up. But you can see here, if we were looking at this chart and it started going down, and let's just say that we jumped in here on AYRO at 250. We didn't get the exact bottom on it because our target was the 20-day up here in the threes. But the next day it bottomed out, and then over the course of the next 3 days, look how it ran up, and it stopped just under the 20-day exponential. So that was a 50% bounce move, just using this 20-day exponential as a target. Now, you can see here as well, when it bounced up, one of those things that you like to look at as well, when you see all three of these moving averages converging in a tight range, you can see that this stock has been finding it very hard to break above that 350 level. And the reason for that is when we look up here, this 310 to 350 level has all the moving averages stuck there. So this is an area, moving averages for whatever reason tend to stop stocks from moving higher and also support them when they move lower. So going into this stock this week, they did an offering. It's been trading pretty well into the offering. We've got all the moving averages here. You'll probably have everyone start to chase this stock on a break over all these moving averages. Remember, a lot of traders trade off these scanner programs, and a lot of these scanner programs are programmed for moving averages, lo and behold. So that is why you have so many traders rush into these stocks whenever they break these key levels. I've got another chart here on AYRO, spread out a little bit more, but you can see here the stock sold off, got all the way down here, and this 20-day was up here at 350. 50-day was up there at 325. So the stock is deep oversold. Remember, looking at our MACD here, bounced all the way right back up. So that made for an easy target. So many times when you see me give targets on these stocks, the moving averages are a big component of what makes me decide on those targets. Now, another one I'm going to talk about I wish there were more beaten up stocks that I could talk about because I really don't want to talk about this bankrupt stock, but here we go. Hertz. This one decided it was going to declare bankruptcy. aside from the news, let's pretend this bankruptcy news didn't happen. This extreme sell-off here on the 20-day was all the way up there in the twos. The stock did a bounce back, sold off again, and then when it rocketed higher, look what it did. It ran right back up and over that green line, the 20-day exponential, and then it actually cruised right up to the 50-day and broke through it. Before they did that offering news and before everyone started bashing it, you can see here that next target that everyone was shooting for was the 200-day moving average up there in the $11 area. A recent one that we can keep an eye on. Many times when you see these big sell-offs, it's news that has driven it. Usually it's bad news. Usually it's financing news. So GLBS did an offering last week and the stock got whooped. Right now, if we look, the 20-day is at 66 cents. So we are 50% under the 20-day. Now, when you're using this 20-day and moving average way of trading, especially when it comes to offerings, it can be a patience thing. I don't like going into them right away, but maybe in a few days' time. This was a horrendous financing they did. The fact that the stock was able to hold here is a surprise. They did 32 million shares at 35 cents, but they also did 35 million warrants. When I'm trying to calculate the prices, they did an offering at 17 cents. So this thing's probably going to have to churn quite a while here. And I would suspect that the 20-day is probably going to come down to about 55 cents, 50 cents. So this would be a stock I would probably go back and look at in a week's time. But all the moving averages are up there in the 60s right now. So this is something to, we're not trading it. We're going to keep an eye on it just based off that 20-day moving average. Now, a stock you all are familiar with is Biak. Now, Biak is well above its moving averages, but there was one thing I wanted to point out as well. It's called a golden cross. Now, a golden cross is when the 50-day moving average crosses up through the 200-day moving average. This is a bullish indicator. Now, typically these stocks like to move ahead of the cross and then sell off after the cross. So we've got this upcoming golden cross coming on Biak. So this should bode well for the stock in the near term. Now, for these moving averages, most of the examples I've given you have been on the daily chart, but I will also use these moving averages on the intraday charts, the 1 hour, the 2 hour, the 15-minute chart. And I will also look at them to determine where my possible stop loss could be on a play. For example, we're looking at WWR here, and this is a 1 hour chart. You can tell here, 60-minute chart. And you can see here on this chart, the 50-day, the blue line is solidly at 218. And then we've got the 200-day moving average at 205. So looking at this chart, you can see this is a very, very strong support level. So if I was entering this stock and wondering what a stop would be on this chart, I would be looking at both these moving averages and going, okay, this is a very, very strong band of support just looking at the moving averages, and that would determine how I would place, or if I would place a stop, and whether I would enter a stock. Looking at this chart right here and seeing this great support here gives me more confidence in actually buying this stock using the moving averages. So really quick video. Hopefully you guys, we don't have a lot of examples right now for using the 20-day for a bounce, except on these junkers like actually GLBS and whatnot. Offerings usually aren't a good thing, but hopefully you get the gist of what I'm using here. We pull up the moving averages. We can use them as target areas, as support areas, and when there's a big sell-off, gives us an idea of the potential bounce. 20-day is more of a next few days to couple of weeks bounce setup, and then those simple moving averages, they take longer to adjust. Those are more the medium to long-termish bounce targets and support targets on a stock. So thanks for watching. Please subscribe to the videos below and have an awesome day. Bye.